Good evening, I hope you're doing well. In today's video, we'll continue with our series of using price action to taking informed decisions in the market. In today's video, I have selected Nestle as the stock that I want to focus on. And the reason for selection of this stock is because this stock has recently been in news for laying off 6% of their overall staff. So Nestle India, as you are aware, is the owner of some of the most popular brands in the country, such as Nescafe, Maggi, Kit Kat, etc. And it's a brand that needs very little introduction. A mere search on Google will tell you a lot about this particular company. And recently this company announced that it will be laying off 6% of its work staff. So now the question is this good or is this bad for the investors of the company? Because the idea of doing this assessment is to eventually be taking a certain position on the company, and what we are going to do is we are going to use this news as a trigger in order to establish a bias. And once we have established the bias and made a plan of what we want to do, then when the price eventually reaches there, we execute the plan. So as you can see, the stock that I've selected is Nestle on the top left, and you will see that the time frame that I've selected is monthly, because it's almost going to be the first time that we're going to review the stock and we want to know what its general trend structure is like. And here you will see that this stock obviously was creating an all-time high, but you will note that I have selected the year 2015. And the reason why I've selected this particular year 2015 is because we know that Maggi is perhaps the most dominant product of brand Nestle. And in 2015, Nestle successfully managed to get into some trouble with the product from the FSSAI audits, where they suggested that certain ingredients of Maggi were not good for a certain segment of the society. And we can see the impact that from a high of nearly 360, 370, this is obviously a stock split adjustment. From a high of nearly 360, this stock goes all the way down to 245. So that's a huge correction, a near 25% correction on the stock. And obviously for the investors of this particular stock, it must have been an unpleasant time phase. We will see that the correction extent was quite deep. It pulled back all the way into the previous range, and the doubt of the trend of this stock, the entire trend of the stock would have been in a doubt. So we'll just see how the stock fared after that. We can see that it recovered quite strongly, and obviously once the high was created here in 2015 March, it took some time, I mean after creating a double top, to decisively break this high in 2017, which means that after a major fundamental issue in one of the key products of the stock, this stock showed recovery. The management showed the capability to respond to the challenges that were presented to themselves, and in a couple of years that story is now really a thing of the past, and the stock continued with its price action, as we will explore further. So now when a stock is performing in this manner, and that is, as we can see, it's just clearly creating new highs, it is obvious that as any technical trader, we will have a single bias on the stock, that this is a stock that I want to buy as and when I get the chance, unless of course it starts creating new lows. So we'll see that, here after a big bullish bearish engulfing, the stock again ranges, but this time the range is much smaller. This is just about a 12-month range, a year range, and the stock breaks out again. So we will see a major fundamental issue, the stock ranged for almost 2 years. A minor production related issue, the stock ranges for about a year. And once again, the management has the capability to take care of that issue, and the price continues. And so I'll just take fast forward it today, and we will see that the stock today is at nearly 1200 levels, significantly high, like from 2015 levels. From the highs of 2050, it is 4x returns, and from the lows of 2015, because the 2015 level was say roughly 315, so it's roughly 3.5 times from the lows, and from the highs I mean, and from the lows of around 250, it is roughly, you could say, 5 times the value. So anywhere between 3 to 5x has been the return in a decade for an investor whenever they bought into a fundamentally strong company which experienced some kind of a challenge. And the question is now, is this company continuously fundamentally strong? And the answer here, prima facie to me, seems like yes. There is no real change in the fundamental. We can see that the stock did create a previous high. We are seeing that the low in this case, again here, I will mark this with a clear blue line. This is the low that, I mean, as we are fully aware that the entire market corrected in the periods October to March. This is pretty much the low of March, which is at about 1070 levels. The stock is currently trading at 1270 levels, and of course, for any serious investor, this particular low that the stock has held for almost the entire year becomes a decisive low to plan their investments. Which means if I were buying Nestle, and let's say for example I have planned to risk 1000 rupees on Nestle, and if I'm not going to use technical analysis to time my entry, I still need to use at least some analysis to define my exit. Then in that case, there is no justification to hold on to a stock if it creates a new low after your entry and if it breaks a pivotal low strongly. So logically, 1070, or if I'm slightly more conservative, maybe I'll pull it a little lower, 1030, 1050, around these levels basically, the trader will have to give up on the long position. You can resume it after that, but for now, if you're planning a trade, then there is no justification to hold on to if this low is broken. And obviously, if this high is broken, that is, let's just say, for example, I've marked here, if this high of 1380 is broken, there is no justification to add further, which means that the stock, which is trading in a range since 2024 and has been 1.5 years in this range, let's just give it an average price of a value in between the range. So I'm just simply marking another blue line here. The average price of this stock has been pretty close to say 1235. That's the extreme high point, the extreme low point. I've just divided it by 2 and taken a rough estimate, say 1235 points, and that's precisely where the stock is trading, which means that the average investor bought this stock at approximately 1250 rupees, and this investor has been in place since the last year or so. If you buy this stock at 1250 rupees, I see no reason why you should hold on to this stock for a value lower than this. And if the stock breaks out, then there is obviously no reason to add further, which means that whenever a bullish trending stock gets into a consolidation, it is at there that we want to plan our SIPs, we want to plan our long-term investment plans. And because they will stay there for several years, and it gives us the time, a small investor, the time to gradually accumulate that particular stock. So this would be the general structure if I would seeing Nestle in the long term, which means that the current news trigger of a 6% employee that they're going to sack, actually if you see it, the market has only traded in an explosive green for the month, which sort of indicates that the market is quite happy with the news, even though it is not very good for the individuals who are maybe losing their jobs. And because the core products are all milk derivatives for this particular company, there is very little innovation as such. The real innovation comes in packaging, real innovation comes in distribution, and maybe a new presentation, maybe a lyophilized form or a liquid form or certain presentation form of that core offering, which adds value. And if you compare this with other industries such as technology or logistics or infrastructure, these innovations are significantly less costly as compared to this. So which means that not only is the fundamentals of the company good, I mean the company has a revenue of, I don't know, maybe $2.5 billion a year. This we are talking about Indian Nestle. It has a near 20 to 25% profit after tax. It is cash surplus. It has very limited debt. There are, I think, maybe 9 major production lines. This company is deeply invested into India. It looks like any bad news, any pullbacks are a reason to accumulate into the stock. So accumulate means you don't sell your house to buy the stock, but you have a plan and you start allocating money to that stock. And yes, I would. So I would have a long view on this particular stock. Coming back to the shorter time frames, we will note that clearly 1235 is going to be a reasonable support. I mean, we can see that the stock is ranging for quite some duration. The stock has recently broken out of this range, and so when these range breaks actually happen, the news which comes across as bad news is maybe not very, very bad news. So the question is, how would I trade this news? My answer would be, I would look at buying this particular stock. I have a long view on the stock based on its monthly structure, and I would use price actions on the shorter time frame in order to stay in this direction. And hopefully I would have accumulated sufficient positions that when this stock comes near the 1350 1350 to 1400 levels, hopefully it will give a decisive break, and it will close my investments in this stock at an average value of say 1230, 1250, with a stop loss of 1050. And as the stock keeps moving up, if that happens, the stops will obviously keep rising. If the stock, instead of going up, fails, then at that point we'll have to book the loss like any other process. So I hope that this video has been useful. I have simply used the news inflow as a trigger to cover a particular stock, a particular chart type, and this chart type is a clearly bullish structure, and it generally needs to be bought. It is currently ranging. It has been ranging since 2024 January almost. So it's almost been ranging for close to almost 2 years now. So we should not have extremely high expectations. But when a bullish stock consolidates for so long, you will generally assume that the breakout of the range will happen in the direction of the previous trend. And with that bias, with that reinforced bias, I wish you the best for the remaining trading week. Thank you for your time.